Hello and welcome to Fintech Chatter, brought to you by Tier 1 People, leaders in Fintech executive search. I'm your host, Dexter Cousins. In episode 98, I'm joined by Shadi Haddad, CEO and co-founder of Till Payments. It's a welcome return to the show for Shadi in what has been a fairy tale year for Till. When Shadi last appeared on the show in episode 15, Till were 30 people. Fast forward to today, and they're now over 100 people and expanding into the US off the back of a monster 110 million Series C round. I talked to Shadi about what has been the 10-year overnight success of Till and how they're now set to become Australia's next force in global payments. Before I chat to Shadi, I've got a top opportunity to share for a Chief Information Officer based in Sydney. We're working with a well-funded payments startup that has significant backing. You'll get to take the business from startup to scale up, report to a top-class CEO, and own the technology strategy. The business already has traction and genuine unicorn potential. This is one opportunity you do not want to miss out on. For more information, contact info@Tier 1 People or go to the jobs page on LinkedIn. Shadi, welcome back to the show.
Thanks, Dexter.
Massive kind of news that you put out last week. $110 million raise, Series C. Fantastic. Congrats to everybody at Till.
Thanks, Dex. It was definitely a journey, one that has been incredibly rewarding and supported with high conviction with not just local investors, but a very large influx of international investors that believe in what Till are delivering to its customers and its mission around providing simple and seamless payment solutions on a global scale for merchants and partners.
Awesome. Well, look, we're going to talk about that raise in a little bit more depth a bit later in the show. But what I thought would be really cool, Shadi, is for you maybe to kind of start off by sharing the Till story, because in the intro there, I talked about it being a 10-year overnight success. One of the great things about the podcast is I think people that listen in and get inspired by people like yourself sharing their story and journey. So I wondered if you could take us back to the early days of Till and the origins of the idea and business.
Yeah, Dex, absolutely. Look, it's always the most interesting part of our history in that this business kind of started as a bit of a side gig and an accident around solving a problem. Payments, which is contactless payments, tap and go, and really we started this business to solve the problems that the banks didn't want to solve on behalf of partners and their merchants. I think, like with any business, we are definitely a 9 or 10 year overnight success story. There's been a lot of grind to getting to where we've got to. There's been a lot of reinvention in, the team, the culture, the offering, the go-to-market, the placement. And, I think I mentioned in my last podcast that we've been an incredibly discreet organisation about, what we've been doing, who we've been targeting, our go-to-market, who our customers are, and really it's time for us to come out and be a lot more vocal, a lot more present, and a lot more in view of partners and merchants and the industry as a whole. I think with any business, the most important thing is your people. We definitely went on a journey around identifying who we are as an organisation, what our values were. We're now at that Till Force position where we believe that if we hire people on those force values, that we won't go wrong. And to date, I think we're at 125 people. And again, if you look back 12 months ago, it was maybe 25. So, but we've had a huge.
Mate, it's a Till army, not a Till force.
It is a Till army, but we're going to keep the Till force values. And for those who don't know, the force values for us are, focus on the customer and the rest will follow. One team, one family, rest in reason, move in passion. So think before you act, create, break, iterate, and exceptional and nothing else. And really that translation of those values is core and underpins everything we do as an organisation and how we hire our people. And we've been incredibly fortunate that those force values resonate with the people that we're attracting, and it's evident in the work we're doing.
A lot of people kind of embark on this journey and go through those kind of sleepless nights and the days that they wonder, whether it's ever going to be a success. What point did you kind of wake up and think, I think we've nailed it now. I think we're kind of, we're on the right track and this is going to be successful?
Look, I think the inflection point and the moment for me was, when we as an organisation were solicited by a very large multinational merchant to solve a requirement for them. And it was years and years of knocking on the door, justifying who we are, trying to demonstrate capability, just to even get, a pilot underway. And it's fair to say now that, we've got a great reputation. We've got great customers coming to us. We've got great partners coming to us. And that's because we are providing those simple and seamless payment solutions, both for the merchant and for the partners that are looking to look after their merchants holistically. I think, that key moment where we started to see an influx of requirements and requests to do business was definitely the point that got me.
There's always, I guess one of the kind of golden rules of any startup small business has been just to focus on one thing. But we're starting to see with it, I guess, certainly the unicorn businesses, Revolut being an example, that, they didn't focus on one thing. They focused on building the super app. Did you kind of start out with a niche or did you think, hey, there's a lot of problems here. Let's just try and solve the ones that are, the ones that we think we can solve?
Look, it's a great question. I think the part I have struggled with, on my journey is how much is too much and how much is not enough. And I think what we've done as an organisation is progressed through the payments value chain, starting at the very front, as a gateway and solving some of those problems for merchants in front of the banks, and then, eventually becoming a referral partner and then a third-party processor, and then eventually becoming our principal member, with the view that, we'll go even further and start becoming an issuer and start providing, financial services, right? So I think the evolution, that has naturally taken its course down the value chain or up the value chain has really been the path that we've been following. I think when you're soliciting investors and when you're soliciting customers, it's very important to frame out what you're great at and what you're known for, but really what your vision is. And our vision is to be, that end-to-end, all-in-one, seamless payment solution provider for our merchants and partners globally. And it's always with the merchant at the centre of, all of that mission, right? So if we can make their life easier, then we're doing our job, and that's what really drives our solution and innovation.
I guess one of the big challenges for any Aussie fintech startup is that the market here is so small and highly competitive still that you have to think global from day one. How have you managed to, kind of get global clients from fairly early days within the Till story and now look to kind of expand on that?
Yeah, another great question. I think what's really important about going global is having something that you can manage, light touch and remotely initially, and really building that footprint on the back of that. What we did as an organisation, being a gateway first, was, we did operate and essentially provide a platform to 500 cities around the world, and in a particular vertical, which was parking and transit, local government, those sorts of areas. So what it did for us was build an international reputation, a global footprint of technology. It made us think about, what's, cross or international, cross-continent architectures and service and support need to look like, so that when we decided to step up the value chain, we had all the base learnings in place, and really it was around solving for, the other parts of the business that are now being attached, like the acquiring, the other products and services, to follow that same footprint. I think it's really important not to try and do everything globally at once, because there is different regulation in every market. There are different licensing requirements. There are different compliance requirements, and really as an organisation starting up, if you're trying to do all of those up front, you're going to get caught out. And I think the advice there is to step into the international expansion and have an eye for it early and do it with one product or one offering that you can manage remotely and successfully, in a light touch manner.
Awesome. No, you obviously, we've been in, I think, it was May, June last year you were on the show. We just kind of started lockdown. Since then, we've kind of been in and out of it. The whole world's kind of completely changed. Obviously, the payments space has become even more competitive, as a lot of businesses now have finally recognized that they need to move digital. What have you found have been the kind of new opportunities that have come out of COVID for a business like Till, and where do you see the kind of opportunities for you to kind of really scale now you've got this, really, I guess, critical backing to help you do that?
Yeah, look, Dexter, I think what COVID did and the pandemic did globally was it made merchants and partners rethink their business models. It made them rethink their acceptance requirements, and it made them rethink, what do I need as an organisation to keep functioning when everything is taken away from me? And essentially, when you consider what happened here in Australia and in some parts of the world, our retail society shut down. Other than the bare bones staples that we needed, we were basically confined to our homes. And so if you think about taking away the livelihoods of businesses overnight and expecting them to come out the other side without any thought, I just think that was something that, provided an opportunity for an organisation like Till to step in and say, we understand you may be used to providing a solution in store, but hey, these are some of our, remote payment services that will make, commerce easier online and not necessarily, needing to have a face-to-face interaction to collect a payment. I think it's definitely more around creating value to those merchants that they didn't necessarily need or think they needed sort of pre-pandemic, and providing new ways for them to interact with their customers. Now, if I look at automotive as a great example, we took an automotive dealership and made it completely virtual. We provided a sales and concierge style purchasing process. We allowed the dealer to collect a deposit without necessarily, having the person sitting in front of them securely and safely. We moved service and service operations again to a completely concierge-based proposition where, we were using tools that we have to invite customers at a certain time, collect a payment, and provide a concierge operation around, what was the core function of service. And really, when you start to think out some of these solutions for your merchants, they start to rethink their businesses and the value that creates. And I don't think a lot of the businesses that have changed during COVID will ever go back to the old way of doing things. I think all of these new, experiences and efficiencies and new ways of doing business has helped them become a lot more efficient and help them understand that it's not all about bricks and mortar. It's about the customer experience and being able to have that anywhere.
Yeah. So it's really interesting to hear you say that, Shadi, because if you think, Stripe, you would have to say they're the one kind of everybody looks at and goes, hey, one day if we can be that. But their approach has been to target developers and the kind of tech community, it sounds like most of your clients wouldn't know the first thing about an API or coding or anything like that. So it sounds like you've kind of you've catered for this completely different world that seems to have been forgotten.
Yeah, look, I think Stripe is definitely a benchmark, and it is definitely an organisation that we should be looking to and aspiring to. What they have done is they've embraced a technical community and given them really simplistic ways and tools that are API driven to essentially run their business. But I think where that doesn't really resonate for a lot of merchants is if they're not necessarily a tech-based business or they don't have tech resources or organizations that support them, how do they run their business with tools that don't necessarily need anything more than simple click-based configuration to be able to turn on a service or request an item or set up a payment terminal. It's really about the simplification of a task that typically banks have really kept complex. I think even the whole process of ordering a payment terminal has just been incredibly complex. Being able to simplify that, being able to make it easier, and build a bit of a life cycle around those services that constantly make sure the merchant is getting the best value out of them, I think is.
Yeah. Now, let's talk about the raise again, because at 110 million, that's got to be certainly up there with some of the biggest Series C rounds we've ever seen in Australia. Do you want to tell us a little bit about the kind of story and background behind how it all happened and kind of how you managed to pull that off?
Yeah, look, it's quite funny. When we started the process, we had an indication of what the Nirvana state would be, and we built this very ambitious pitch deck that talked about not just amplifying our local operations, but really taking that massive leap into the US and into UK, and really making sure that we've got enough funds to invest there, as well as exercising some of our joint venture and M&A opportunities. We were very pragmatic in that, we did the typical, we appointed UBS as our partner locally to essentially help us solicit the local funds and, essentially pitch to those funds under, what would look like a typical capital raise process. It was back to back. It was 4 meetings a day. I must have done about 50 meetings in the space of 3 weeks, and it was all remote. I think the hardest part about this raise, but I guess the most rewarding was it was Teams based, so it was Zoom based. It was all remote. It was all video based. But what it allowed us to do, and I think what I really appreciated about the process, was it opened up the entire world to us, to a new set of investors that were geared on growth, understood unit economics, understood client acquisition costs, and understood that if you give a business time and capital to prove out, a successful business model in other markets, that you can really do great things. And we were met with incredibly high conviction, not just from local support, but also international support. And I think we finished up roughly with a 60-40 split between international and local, in favour of the international. And I think what that did for us was it really highlighted the opportunity that we are operating in one of the biggest target addressable markets in the world. It's still in its infancy. Investors believe in the addressable market, and they also see value in the simplification of solutions to address that market. And if you can get the balance right between client acquisition costs, and return on capital expended, you really get to see investors that believe in your business with high conviction are willing to back it. And I think just as a closing point, when we went on the journey, we wanted to ensure that the investors provided value, not just beyond the capital, but they wanted to be involved in the business. They wanted to help us grow into international markets. They brought their own knowledge and support to the business, which again, I think we proved in our earlier rounds that if you've got access to people and capital, it makes sets you up, to get a great outcome. And really, these international investors on this journey of, and the local investors obviously, have really paved the way for us to go offshore and grow this business globally. Fantastic.
Now, you kind of talked about this just there. The investors are, not your kind of typical, fintech investors or big tech investors that we hear of all the time, but have been chosen for what they bring to the table and can help the business evolve. What have you kind of learned from your advisors and investors over this journey as you've scaled from 25 to 125 people in the space of 12 months?
Very interesting question. I've learned two sides. There are two sides to investors, and one is, how do I support this business that I believe in by doing everything I can to amplify their success and really provide openness into my network to make it easier for them to succeed. I think the second part and the second thing I learned was that the quicker you can identify your market opportunity, the quicker you can solve for it. And typically it's the investors that you align with that help you crystallize that quicker rather than taking the organic process to identify where you would fit. And I think as part of our journey, we found a group of investors that understood where we were successful and could provide a mirror opportunity in our adjacent markets and our international expansion markets. And it just meant that the journey to that success was a lot clearer and a lot more crystal because we had a direct path to the customers, the partners in the ecosystem in those international markets through these investors.
Awesome. Now I want to talk to you about hiring if we can, Shadi, because I think everybody's biggest challenge right now is finding the talent and the skills. There's obviously a massive shortage in tech, but there's an even bigger shortage in payments and tech or payments tech. Now, I'm I don't know if you're willing to share this, because it might help your competitors, but how have you gone about basically, quadrupling the size of the business when we're in the midst of this talent shortage and we've all been working remotely, so you've had to do interviews, etc., all remotely?
Yeah, look, I think we identified that the only way we were going to succeed in attracting talent was to have two things. One, a very strong owner in that space, a head of talent that understood the business, understood the people they were recruiting, understood our values, and could really articulate and filter through the talent pool and also provide a good enough opportunity as part of every job ad for a potential candidate to want to hit the button and apply. Secondly, I think, and you'll see a lot of this, as it evolves, but the employer value proposition is becoming far more important. And, we need to understand that as employers, the world has changed, people have changed, the pandemic has, made people appreciate working from home and flexible arrangements and being closer to their families and kids for prolonged times. And that's a great thing. That's probably a great outcome of the pandemic. We were so used to being herded into our offices and then herding back and only spending time with our families, before and after work. And so being able to adapt your employer value proposition to solve for, the changing requirements of employees, being flexible, being supportive, and providing opportunity, right? So I think, we've come out with a new mantra, and that's everything's possible. And really what we say to our staff is you may be coming in for a particular role, but this is our journey. We're going global. This is what we need. And if you want to step up and apply and evolve in the business, we're here to support that. And we always look internally before we look outside to promote our people. And really it's that force, values and culture that I think is really core to what we're doing. The last point I will say is that, we are going back to the office now, and it's definitely the most challenging part for an employer to bring people and welcome them back. And so really what we're going to be doing is taking a very proactive approach to making the work office, a lot more flexible, a lot more enjoyable, and open, so providing breakfast for our staff at early hours and providing dinner for our staff at late hours, potentially splitting the times, having roster days on and off, having very open collaboration spaces. So really changing what was a general office environment to a more flexible and adaptive office environment, I think is really cool, backed by a solid EVP.
Yeah, I mean, it's really, you touched on the EVP then. It always strikes me, Shadi, that for years we've been focused on customer experience and not really applied that to the lens of our people and the employee experience. What do you found as being, the kind of the thing that people that are successful at Till, kind of say why they stick around and what's got them kind of committed to the business?
I think there's a level of transparency that we have employed as a business where everybody is on the journey and everybody knows what every team is working on, what they're doing, what their goals are, what their KPIs are, and they're involved in the process to develop those outcomes annually. And really, I think by having that transparency in the business, by having that direct touch to what's going on, people don't feel confined in their role. They're not just turning up, doing a function and leaving. They're turning up, understanding what the business needs, understanding what the business is doing, and they're contributing to that, and they feel like they're contributing, which I think is the most important part that sometimes employers forget, that staff need to feel like they're contributing and they're part of something and that they're valued. And so little things like, saying hello to them on Teams because you haven't had a chance to meet them face to face and checking in are incredibly important components of making sure that people are engaged and know that the organisation, is here to support them. And then just bringing them together. Look, I think even in the world of pandemic where we were sitting in our homes, we were doing Friday afternoon, virtual trivia and playing games and having a virtual drink. All those things that you would have typically done face to face, we used to take for granted, but they're incredibly important, and it's just as effective if you're doing it constantly.
You talked about transparency before, and I seem to remember, a year back or so, we were working together, and you kind of gave me feedback from an interview, and I think you said the words that I might have scared this person. And it turned out that you were just being radically transparent with them. How do you find that kind of, how do you identify the people that are going to kind of take that transparency and use that as the kind of the energy to go and be successful in the business? And how do you identify those that kind of maybe say this might not be the right environment for them?
Good question. Definitely part of our, values is really making sure that, people understand what they get themselves into and that no 2 days are the same here. And so if you're looking for a, cushy, I want to, hide inside an organisation, just be left alone, this is not the place for you. Every day is different. Every day that this place is moving into, different areas. We need our people to move with us. And I think being upfront about that is really cool. And I think the other side of that is that we also provide them stability. So it's not just about them contributing to us. It's about us contributing to them, their own learning and development, their outcomes. And I've had many frank conversations with, some of my existing staff that I'm incredibly supportive of external ventures that they're personally wanting to do. And that's just about being an employer that understands what makes that person tick, because by being supportive of their own endeavours, and being open about it, they're not hiding anything and they're being incredibly functional in their day job, right? So really that transparency is something that you need to be upfront with, and you need to not put a bit of fear, but just be incredibly clear about what the employee is coming into in the early stages of that solicitation.
Yeah. There is very much a family feel to the organisation as well, and the culture, not just extended to your people, but extended to your customers and your partners as well. What do you think that's kind of, how's that contributed, do you think, to the success of the organisation?
One team, one family, Dexter. It's really about looking after, ourselves, our people and our community. It is our second value. It's one of our most core values. It's on everything we do. Again, it's about that, people trusting us and knowing that we've got their back. And that doesn't just extend to our colleagues, it extends to our customers, it extends to our families, right? Really, we need to be trusted and depended on. We are in the business of moving money in the end, and that is a very critical function for businesses. So for them to trust Till, is something that we need to definitely honour and appreciate. And so really, we need to make sure that we are seen as a logical extension of our customers' and businesses. And we do that by having this family approach. We welcome all customers, with open arms, and we look after our community as best we can. I think that's something we will never shy away from. And again, it's a core part of our EVP.
Awesome. Now, I wanted to have a chat with you a little bit about, just the fintech industry here in Australia. You've been around the industry for about a decade now. I guess when you kind of look at where we've come from, where we're at now, which fintech or what area of fintech has got you most excited and why?
Look, I look at technology and fintech as one and the same. I've been in the tech industry for quite a while, pretty much all my career. But what I've seen over the last 10 years is we've had a number of very successful Australian tech companies take us global. And as an industry, we've kind of stood back and watched. And really, it's only now that we're trying to rally behind the rest of the industry to try and replicate that success. I think what we need to do better as an industry, and as a community, is be a lot more open to support our peers and provide, that guidance to those peers, and those learnings that you're experiencing as a founder and as a CEO on a day-to-day basis. I think I said in my first ever LinkedIn post that the road is windy. It's definitely tough. There's always obstacles in the way, but it's always the road remains underneath, and you've got to just persist. And really, sometimes if you can lean on people in the tech community to support them and obviously get support, I think that would go a long way for creating a better community for us that is envied on a global scale. And I think we're starting to see, some of that come to life with the Tech Council of Australia, really as, kind of the pillar or I guess the pinnacle of the community coming together and trying to understand and foster industry growth in Australia.
Yeah. It's a really interesting point that you raise there, Shadi, because if you kind of were to contrast Australia with Silicon Valley, the approach to Silicon Valley is put a pitch deck together, walk around town, and, beat to every VC and somebody will give you $20 million. Here in Australia, right? We've seen so many, yourselves included, so many inventive ways, in different paths to actually building a successful business, and whether it's been Afterpay and Zip, who listed, whether it's been yourselves who kind of went, more the kind of private investor side and then relevant investors to the industry. There's so many different ways and kind of paths now that people can follow. And, it's great that we're finally starting to see, Afterpay and, the others kind of starting to now put back their success, not only in the form of investment funds, but as you say, things like the Tech Council and people kind of sharing that knowledge and expertise.
Yeah, look, I think one of the most tiresome and difficult paths for founders and CEOs is making sure they have the right capital adequacy in the business to support their growth and aspirations. And really, that is it's a tough road to go on if you don't know where to start. People don't know this, but I travelled the world for a year and didn't raise a penny. Well before.
Can I ask you then? Sorry to interrupt, but can I ask you, how does it feel then to do 110 million raise? You must have just been double checking yourself and going, "What?"
It's incredibly humbling. I think what you learn between the first raise and every subsequent raise is how to refine, what your story is and what your go-to-market is and what people are investing in you and where to really focus the discussion. It's fair to say that there is a very diverse investor community, some of which are incredibly interested in the detail and others that aren't. And so, I think if you're if you're not careful, and like I wasn't in the first time I went around by myself, you can lose a lot of time in the process and get nowhere. Really, it's about the people you connect with, and it's the clarity of what you're trying to pitch. And I think we as a community need to do more around making the availability of the right type of investor more obvious. And I was talking to a close CEO and founder the other day, and he was about to embark on his own raise, and I said to him, "Look, don't waste your time. These are the ones you want to go and see." And in 5 days' time, he rang me and said, "Mate, really thank you. We're pretty much full." And that was because through my learnings, I understood what people look for, and I understood the types of investors that fintechs need to go and see at certain points within their life cycle. Right? You're either too small or too early, or you're too big. And it's tough because some people say, "Oh, look, you're not quite there," or some people say, "Oh, you probably you're not quite VC material." But there's this whole new area called growth, and I think that's where the opportunity is. The growth investors are the ones that are really, I think, setting the stage.
Yeah, and I posted something on LinkedIn yesterday, which was, slightly in response to N26 raising 900 mil, but I kind of put, the new benchmark for a fintech unicorn isn't being valued at $1 billion, but raising $1 billion. And I think people kind of thought I was, having a dig at valuations, and I wasn't. I was actually saying, isn't this incredible that now investors are prepared to put $1 billion into a business to make it work and make it have an impact?
Yeah, look, I absolutely, that absolutely resonated with me. I think, again, as a founder, you struggle with the timeline of providing a return on investment to your investors. And it's something that always plays on your mind, especially for your earlier investors where, they came in at the most dangerous part of your life cycle. And yes, they've seen the value uplift, but the timeline may have taken a little bit longer. And you as a CEO and a founder maybe want to stretch those timelines further because you're now anchored with even more capital to prove more success and therefore more valuation. I often get asked, is this your last round? And, I think my answer is, one thing I won't do is predict the future. And one thing I won't do is wait until I need funds to go back and raise funds. I think we should be raising when we know and when the market's right for it. And I think that's a really important message to founders. Raise when the market is, supporting it, and don't wait for the time where you need it the most because you run out of time. But it's I think to your point around raising $1 billion, it's something that is becoming far more, I guess, prevalent, and we're seeing lots of big investors, leading mega rounds. And one of our investors said to us this round, it's usually the marquee round where you're raising $100 million that sets you up for those mega rounds.
I'll just kind of segue into the last part of the show now, which is really just to talk about your plans for the next 12 months.
Yeah, look, for us, the next 12 months is about investment in our tech stack and really bolstering our teams locally to bring to life our next generation platform that is usable on a global scale, but also it's about the establishment of our US operations, which is well underway. We now have a team of 7 people over there and some incredible talent. We're about to appoint a regional director in the United Kingdom to kick off those operations. So it is international expansion backed by some significant investment in our technology stack to support that.
Awesome. So if people want to get on board the Till rocket ship, where do they need to go?
www.tillpayments.com and under our resources page there is a contact us section for jobs that are currently available.
Okay, last part. When you were last on the show, you told me that kind of Afterpay were the benchmark. 12 months on, I wasn't expecting, I was expecting big things, but not this big. Where are we going to be 12 months from here when you're next on the show, Shadi?
Honestly,
And I know you said don't ask for predictions. I'm going to put you on the spot.
12 months ago, I think I would have sauld to you that definitely would aspire to be like Afterpay, and what they've achieved is incredible with the acquisition by Square, and I think their journey ahead is awesome. What I'd like to see us in 12 months is to be a multinational payments acquirer that is really setting the pace around solving problems for merchants that are simple and seamless on a global scale, backed by an incredible team, and known for doing that.
Well, Shadi, it's been great to have you back. Congrats to everybody at Till. Awesome 12 months, and great to have you on the show again.
Thanks, Dexter. Appreciate it.
And you can connect with me, Dexter Cousins, on LinkedIn and Twitter. For early access to new shows and updates on the latest exclusive opportunities through Tier 1 People, subscribe to our newsletter by visiting the Fintech Chatter page on LinkedIn. Thanks for listening. If you enjoyed today's show, remember to press follow on your favorite podcast player, and please consider leaving us a review. It really does help me in bringing in great guests and help fintech fans like you discover the show. Fintech Chatter is presented by Tier 1 People, leaders in fintech executive search. We'll help you launch, scale, and innovate by delivering world-class talent. And you can find out more at tier1people.com. Until the next episode, stay safe